In this play series, which is going to consist of around 9 to 10 videos, we are going to look at the calculation of goodwill. How do you value goodwill? And what is the nature of goodwill? Now, there are different methods of valuing goodwill. The one that we are looking at in this video is normal average profit method. So what happens is that in a business, normally when you prepare your profit and loss account, right, you will have your revenue, you will have your expenses. When expenses are debited, there could be something which is in the normal course of business, right? Something like your rent, salaries, etc. And then there could be certain expenses which could be one time, right? Or otherwise, let's say for example, there could be something which could be exceptional in nature. So someone left the company and you paid him some retrenchment compensation. There was a fire and there was a loss of stock. What we do in the normal average profit method is we compute what is the normal profit which a company would have made. If, let's say for example, there were no exceptional expenses, they were all normal expenses, from the revenue number you reduce the expenses and you will get the normal profit. But that seldom happens because there may be certain exceptional items which might be there, right? When you are given the profit numbers, after considering these expenses, what we need to do is from this profit, we need to exclude these one-time exceptional expenses, or if even on the revenue side, you have some income which is one time, that has to be excluded, something which is not a part of my normal business. The profit that I get is the one that has to be averaged out for a given number of years, which may be agreed between the partners in the partnership deed, right? And then the goodwill may be calculated as a multiple of that average profit. Without wasting any more time or without actually spending more time on this, let's move on to the question. Arinjay and Ankur, I've considered my name here in this particular video, were partners in a firm. They admit Amit for 1/5 share on 1st April 2016. Calculate the value of goodwill on the basis of 4 years purchases of normal average profit of last 5 years. Now, what this statement means is that first I need to calculate what is the normal average profit of the last 5 years, right? What 4 years purchase means is that the value of the goodwill is 4 times the normal average profit of last 5 years. The profit and loss account showed the profit as follows. For 2010, 31st March 2010, 2,50,000. After abnormal loss of asset sale, rupees 50,000. So like I told you, what this means is when I prepared my profit and loss account, there was revenue, there was expenses, and there was an abnormal loss on sale of asset of 50,000. After considering this loss, my profit, which was there for the year, was 2,50,000, right? But we need the normal profit for every year. So we are going to remove this abnormal loss and arrive at the profit. And that is what we are going to do for all the 5 years. So that we'll just do that. Okay. So the year ended March 31. And then I'll put on the years here. Which are the years under consideration? We have 2010, 2011, 2012, 2013, and 2014. What you can do is, for the sake of convenience, you can actually take a print shot of the question on the previous slide, right, and solve this question. How much is the profit which is shown in the profit and loss account? And I'm talking about the profit without adjustment. So you have 250, 315. So 2,50,000, 3,15,000, right? Then you have 3,30,000 and 3 lakh. Right? And you have 1,05,000. But these are the profit which are shown as the profit in the profit and loss account. Are these the normal profit? The answer is no. Why? Because we are given certain additional information. This profit of 2,50,000 is after abnormal loss of asset sale of 50,000, which means this abnormal loss was debited here. So if this was not here, this profit would have obviously increased, right? So I am going to make an adjustment for this profit in this year. So adjustment. How much is the adjustment here? 50,000. And what's the reason for this? The reason for this is this was an abnormal loss debited to the profit and loss account. What will be my revised profit or the normal profit, if I may call it? It would be 3 lakh for this year. In the next year, the profit is 3,15,000, including abnormal gain of 75,000. Now, what this means is that there was a gain of 75,000, an abnormal gain which was included in this profit. If this gain was not there, what would have been the normal profit? It would have been 3,15,000 minus 75,000, or in other words, 2,40,000. So you need to consider what is the impact this adjustment had on the profit and loss account. The next one is 3,30,000. There's no adjustment. So no adjustment, 3,30,000. 31st March 13, 3 lakh, excluding normal expenses omitted from books, rupees 50,000. In this case, what has happened is that there were 50,000 worth of expenses. These expenses were normal expenses. So when they were normal expenses, ideally they should have been reduced from the profit number. But while preparing this account, somehow this was omitted. But doesn't matter, we are going to now provide for these expenses out of this profit. When you include the expenses, the profit will go down. Therefore, I will subtract it from this profit, right? And then 31st March 14, it's 1,05,000, including retrenchment compensation of 30,000. What is retrenchment compensation? Retrenchment means firing someone from the job or laying them off, right? When you lay off an employee, under the labor laws, you have to pay them some compensation. But that does not happen on a regular basis. It's only once in a time kind of a thing when you are firing employees. So this is an exceptional expense item. We are going to reduce it from this number, or no? We're not going to reduce this. In fact, what they have said is that this is included, which means that this number is actually after providing for this expense. So I am going to add this 30,000 here, right? So my profit here will be 1,35,000. When I do the sum total of all this, I would get 12,55,000 as the total profits for how many years? 1, 2, 3, 4, 5. So what will be my normal profit? Normal average profit. Now, one thing which you need to be careful here is you need to go back to the question and find out what is the normal average profit period which has to be considered. In this case, you've been told that the normal average profit of last 5 years is to be considered. Sometimes you may come across a question where the profits are given for 5 years, but you may have to do it for 3 or 4 years. Then do the calculation accordingly. So 12,55,000, because I need to take it for all the 5 years divided by 5, that gives me 2,51,000 as the normal average profit. What is the value of goodwill? The value of goodwill is given to be calculated as what? Let's go back to the question. 4 years purchase, or in other words, 4 times this amount. 4-year purchase of 5 years average profit. So 4 times 2,51,000, which gives us 10,04,000. So this is the value of goodwill in this particular case. I hope you would have liked this video. In case you want to watch more of our videos, you can subscribe to us by clicking this link here. You can also refer to a lot many other videos that we have and we are regularly uploading for the upcoming examination.